The past couple of weeks have delivered extraordinary economic headlines. The common thread is dramatic uncertainty and disruption as the world adjusts to the new U.S. administration. The stakes are perhaps highest for geopolitics and domestic U.S. politics, but the global economy has been roiled, too, by fears of an escalating trade war. Nervousness is particularly high in Europe, which has been mired in weak growth for years. And now, all eyes are on Germany as a new government takes shape in the region's largest economy following a pivotal election over the weekend. Traditional ties trading down. The world has had to become a lot more familiar with the concept of tariffs. Since taking office, the Trump administration has announced numerous plans for these taxes on foreign imports, though it's worth noting that only one, a new 10% levy applied to Chinese goods, has been enacted so far. Most recently, the White House unveiled plans for steel and aluminum tariffs, and levies for cars, chips, and pharmaceuticals are being floated. There are also proposals being drawn up for reciprocal tariffs. Experts think these broad, tit-for-tat measures could disproportionately impact emerging economies. There are fears they could ultimately spark a wider trade war, something that chief economists were already warning about last month. Danny Roderick of Harvard Kennedy School suggests the best way of dealing with this flurry of threatening overtures is to keep calm and back away. But even if they're not enacted, tariffs can have a disruptive impact. Panic buying has already raised prices for steel and aluminum. The law firm Reed Smith publishes a useful tracker to stay abreast of the Trump tariffs in real time. A global push for growth. Countries and regions are starting to talk tough about the need to boost growth. In the U.S., a drive to cut taxes and regulations is getting underway. This has elevated expectations for the prices of financial stocks, but if other places adopt similar policies, experts worry about a costly race to the bottom. There have also been deregulatory moves on the other side of the Atlantic, where the European Commission is trying to ramp up competitiveness with plans for a bolder, simpler, faster EU. These plans stretch from accelerating on AI to bolstering investment in defense, all while sustaining our quality of life. It promises to be a formidable balancing act. Following federal elections in Germany over the weekend, it looks likely that a conservative-led coalition will come to power. One of the key economic questions is going to be whether the new government will try to loosen the country's constitutional debt brake, which critics argue is holding Germany back from much-needed investment. Fiscal prudence is something of an article of faith in Germany, so the fact that changes to the debt brake are even being considered speaks volumes. Also on our radar. Critical minerals have been in the news. They're being demanded in return for military aid in Ukraine, and they're also giving Indonesia an outsized role in some global supply chains. India cut interest rates for the first time in 5 years, amid signs that the world's fastest-growing economy is slowing down. Australia also cut rates, while the US held steady. A Swiss vote against aligning the economy with planetary boundaries points again to the political challenges of resolving potential trade-offs between growth and sustainability. Gold prices hit record highs amid renewed inflation concerns. Other items worth your attention. Danny Roderick on globalization and tariffs. IMF Deputy Chief Managing Director Geeta Gopinath on the state of the global economy. Ways that how new U.S. policy could impact the global south. The OECD's take on financing sustainable development in 2025. And on the global state of fragility. The FT's inflation and interest rates tracker. The Edelman Trust Barometer for 2025.